Well, hello everyone. Today is Wednesday. It's July 10th. The market's going to be opening in about an hour. Here's what we got in store for you today. FOMC starts today. Jerome is going to be talking to the Fed. It's going to be very interesting to see what they say. The big factor is going to be whether the Fed is going to lower rates or leave them alone. My bet is the Fed is going to lower rates within the next 3 months. Not yet. The timing isn't right. They're going to want to see more evidence of the slowdown in the economy before lowering rates. That's just my take on the issue. Now, the big factor aside from China, earnings season officially is underway, but unofficially kind of starts over the next 2 weeks. Nonetheless, this week alone, we have earnings from very large caps like Bank of America, Wells Fargo, Citigroup, Delta, Cigna, JP Morgan. The overall earnings are expected. The estimates on the street are 2.9% lower than a year ago and about 4.3% higher revenue from a year ago. So kind of mixed, nothing major. The biggest downsides expected from semiconductors and financial stocks. Apple negative revisions isn't helping either. So what am I expecting? There's just not much in terms of a catalyst to see upside. I'm expecting volatility to rise a little bit more. Expect this congestion that we're seeing right now to last till the end of tomorrow when FOMC minutes come out. Then institutional traders will have a much better idea of how to trade this market. My opinion, I'm slightly bearish. I believe the S&P is going to slightly come down. We're going to hit the 50-day, possibly the 200-day moving average, and then come back up. Earnings is going to be a biggest factor, and earnings are giving us the biggest question mark because we don't know if we're going to be a little bit above or a little bit below. The estimates are not that much below what I think the numbers will look like. Last quarter, the estimates were revised strongly lower. Earnings weren't as bad, and that gave us a little pickup. But the second quarter right now, we're looking a little more realistic. In other words, the expectations and the numbers appear to be in line. And 2.9 down from a year ago on 4.3 higher revenue is not really anything major. So things can go either way. But one thing I'll tell you for sure, expect higher volatility as the week progresses and expect more volatility and trading range going into next week because earnings are going to start heating up the next couple of weeks. Don't expect anything crazy. Look for the 290 level on the E-mini, on the ETF SPY, and on the E-mini S&P. Look for the 2900 level. I think if we break below that level and stay below that level, there's a good chance the stock market's going to go to the 200-day moving average before coming back up. I'll talk to you guys soon, and keep your eye out on the FOMC minutes. Thanks.